Hello and welcome to PersonsPlanet.com. I'm John Person, the creator of Persons Pivots. I'm also an author and professional trader. Many people have often asked us, how can we help them and what can our services and products do to benefit them in their trading quests? For starters, we've enclosed a video clip from our stock trading course that has a great trading tip, and I'm sure you're going to enjoy it. We welcome you to our website and to our trading community. We're here to hope to see that your prosperity improves. Please visit us at www.PersonsPlanet.com to see all the benefits and the services that we have, including trading courses, indicators, strategies on multiple trading platforms, as well as instructional videos on how to use the PPS indicator and Persons Pivots on platforms such as TradeStation and, of course, TD Ameritrade's Thinkorswim's platform. We welcome you for further education, and if you have any questions, please come visit us. I'm sure you're going to enjoy what you see. Thank you.
When we use technical analysis, many of you are familiar with the fact that in some of the platforms that I use, or what we've already seen, you'll notice that I have a series of moving averages over my charts. Let's take a look at, this is Genesis. This is just the transportation sector. Notice that we have a value of moving averages. If the market, this orange triangle pinpoints the market moving down, if the market's truly bullish, then prices should stay below the moving average values. When we get a buy signal, prices stay above the moving average. Just like here, we have a buy signal, and then the prices, meaning the entire range and the real body, the price difference between the close and the open, stays north of the moving averages. That's letting us know that the market is still indeed in a healthy uptrend. When we go into looking at shorter term time frames like this 60-minute, while the daily and the weekly are in buy mode, we want to be taking buy signals like, look at this beautiful high close doji. Many of you are familiar with this. And if you're not, we're going to discuss this particular pattern right here. So when we get to it, definitely you want to refer to the high close doji pattern right here. Then we have a doji, market closes above the doji high. We'll talk about that high close doji. Very powerful buy signal. Next, if we are in a 60-minute buy, we want to take shorter degree time frames, manage all your times. More importantly, if we're in a buy signal, the prices should stay above the moving averages. So no matter what time frame you're on, these moving averages help you to confirm the strength of the trend.
Now let's go over moving averages from A to Z, because this is really the crux of how to follow trends and generate buy and sell signals. Pure analysis by looking at price is really the best way of analyzing the markets, but with all the combinations, it can be very hard to see the signals. And what I mean by the combinations, you have to look at open-close relationship. That's one method. You have to look at the close as it relates to the current bars, high or low. You have to look at the close as it relates to past price highs, lows, open, and closes. So there's many combinations and also different time frames that you have to look at and study. That is why we use technical tools such as moving averages. However, there are certain secrets that we need to uncover for you, and that's what this course is going to do, because not every moving average is the same, and if you look at the different parameters that we have to examine, such as open, high, low, close, most people don't consider the moving averages of those components and what they can do for you to help uncover price movement, price direction, or change of price direction from bullish to bearish or from bearish to bullish. So we want to look at some of not only the various types of moving averages that we can use, but I'm going to explain which ones are better for day traders, scalpers, swing traders, or longer term position traders. When does a trend end? As we all, and you may have heard before, the trend is your friend until it ends, And we're going to go over some techniques to help you uncover potentially when trends can end. We're going to go over the logic behind various time settings that are associated with not only calendar dates, but also Fibonacci number series. And we'll get into Fibonacci. I know that sounds like a big word, but it's very easy. We're going to get into that in just a minute. And we're going to cover how and when to use various conditional settings beyond the typical close period. And that's what's really used exclusively by many traders. I mean, imagine this. Every time you hear a moving average, maybe you hear the news or read in the newspaper that they talk about the 200-day moving average. The stock price is above a 200-day moving average. That's a 200-day close moving average. It's a simple moving average based on the past 200 days closes. Well, boy, I'll tell you what. By the time we get 200 days from now, you may see a tremendous move in the market and completely miss the best portion of the trade, the high probability, the high profitable section of that movement. So we're going to share with you different techniques to use. We're also going to go over the pros and cons of several popular moving averages settings and reveal which parameters work best so that you can improve not only your performance, but also profitability. Now, let's go over from right as I said, A to Z. What is a moving average? Simply put, a moving average is a math calculation that averages out a series of numeric values. A moving average series can be calculated for any time series, whether it be 5-minute, hourly, daily, weekly, monthly. In finance, it's most often applied to stock and derivative prices, percentage returns, yields, and of course, trading volumes. Moving averages are considered a lagging indicator. And think of the logic of this. A lagging indicator really just helps traders determine that the trend is intact and confirms the momentum of the market. This is considered a trend-following technical approach, thus the term lagging is used. There are other indicators in this category which include a moving average buy and sell signal system, moving average convergence divergence technical indicator, and commodity channel index, otherwise known as CCI. Now, the reason we call moving averages a lagging indicator because you're taking past price action not to foretell future price movement, just to tell you where the market has been and filter out what the relationship of the current price is to that past price action. And that's why it's considered a lagging indicator. However, I'm going to teach you ways that can help you give a faster turn signal than what most people utilize. Let's take a look at this chart in front of us. This is using our TD Ameritrade or Thinkorswim account with the, of course, as you can see at the upper quadrant here, this is with the Persons pivots. Now, looking at this chart, we see this is from TD Ameritrade, and what we're looking at, Harley Davidson, stock symbol HOG. What we have on your screen is, first off, Persons pivots, the monthly Persons pivot point analysis, which gives us a projected, as you can see here with the green line, a projected target low for the month and a projected target high. We find that information out at the end of the prior month. See how the numbers kind of expand automatically, both up and then down. So basically, here we go. What we have is a target area of what prices may come down to, and it's up to us to determine where we're going to enter the market. Do we catch the falling knife, and as the market breaks the support momentarily for one day, we get scared and we throw out the bathwater with the baby, and next thing you know, we take a loss, only to see the market zoom to an amazing profitable trade? Well, here's what we have. We have a series of moving averages. Notice that we have a blue line when the market's going down, as I'm drawing here. The blue line is above the gold line, right? All right. Now, look at each consecutive range. It's trading, price is trading literally below the moving average, right? So, two things that we're going to look at here when we study moving averages. A, what is the price to moving average relationship. Is if price is below the moving averages and the moving averages are in a downtrend, then the market is deemed to be in a bearish condition. We are not looking for buy signals in that situation.